Hello, everyone, and welcome to this afternoon webinar. My name is Theo, and we will go through together about an important subject, I would say, and that's the inflation. So first, just to double check that you have an okay visual and sound. If you kindly just type a quick yes on the chat below, that will be much, much appreciated. So to make sure that the sound and the video is okay. And before we start, just to make sure that everyone acknowledge that this webinar it's for education purposes and it doesn't intend to give personal and financial advices to any one of the participants. So the title for today is inflation, and we're going to focus on the crude oil chart analysis because as traders and investors, we want to know what's going on with major driven of this inflation subject. And to be honest, commodities, they are one of the most important factors that I can say they distract the whole order of the world when it comes to these political and geopolitical major events around the globe. So here at Admirals, a brief introduction for those who may be first time join us in these webinars. We are a Forex and CFD broker, and we offer more than 8,000 financial instruments to trade. You can trade them through MT5 and MT4 platform. You can download them on your smartphone devices or directly on your desktop and just work them as programs like most of us do. We have a license from many countries, from Cyprus, the CISEC, from UK, the FCA, from Estonian, the EFSA, and from Australia, the ASIC. Our spreads are, we try to keep them as low as possible always, so you have advantage in the market when it comes to short-term trading as well, for those who are maybe trading intraday or scalping. Let's move on. Hello guys, for those who just joined now, I see people, they just joined. I recognize some names also from the live trading sessions we do on a daily basis, and that's great. Guys, at this stage, just allow me to tell you about a promotion we are running, and all the spreads are in about 20% to 30% lower, so you can definitely take advantage on your trading with that. In regards to the social media, I prefer to just walk you through the, just give me a second to find directly this one here. Yeah, so first we have the YouTube channel, all right, in which almost everything happens in the YouTube channel. So here you can see the Admirals Global. We have live streamings. I host on a daily basis live streamings, and please make sure you subscribe on those, so on a daily basis you get updates about the markets, about the currency pairs, indices, and whatever it's relevant for the day. We cover major news events, so you are every time aware about that. We do them at 7:30 London time, and it's for 30 minutes. And please make sure you like and subscribe into our channel. We put so much effort to make content out for you, and it's all about you guys. It's about to help you in your trading and your investing. So all the team, we work for this purpose, to serve you as best as possible. And if you scroll down, you can see the webinars like Paul and Jens and myself are hosting. Very experienced, skillful traders with decades and decades of experience, these guys. So you can learn a lot, and all the recording webinars are here. And also you can find the recordings of the morning briefing show I'm hosting on a daily basis, as I said. So if you haven't watched today's one, you are more than, I encourage you to go and watch it, and then all the rest are just here. Okay, so I will send you the link on the chat, so you can just click and subscribe on that one. Then we move on. We have the Instagram channel, another major social media platform, Admirals Global. Here I posted in the chat below again, so you can find many useful information. We do reels here. We do market updates. We have here the markets in 30 seconds. On Thursday morning, I make sure you have all the relevant informations about the market and everything to keep you informed and update. Also, we put the weekly podcasts here. I go through the major market events in about 5 minutes length, so you can listen it on Monday while maybe you're driving or while you're doing some activities, some exercise. It's very, very useful, and you will be aware of all the market, what's happening in the market on a weekly basis. And last one, we have the Telegram, where we put many investing and trading content here, and also notifications whenever some major news events they come out, or when we are about to go live. So it's a very useful platform as well. So that's from this. And let's go back to where is it now? Just give me a sec, because I don't see it. Okay. All right, so here we are. Now, as for myself, just very quickly, I'm trading and investing for the last 10 years. I hold a master's in physics, and when it comes to investing, I'm a long-term investor. But when it comes to trading, I'm a swing trader. Got away from a very active intraday trader in the market because of many obligations with the work. So I keep positions for days, and sometimes maybe 1 or 1.5 weeks, depends on the target. And I'm an investing and trading educator exclusively here at Admirals, and my job is to make sure I deliver high valuable content for you, relevant with the current market events, and to help you to become a skillful and expert trader. Now, for today's agenda, we're going to see what affect oil prices, the impact of increasing oil prices on consumers, and the expectation and anticipation by chart reading. And really, as traders, as investors, from my experience, guys, if you're looking at the charts, they reveal all the information. Sometimes we try to read all the time, left and right, whatever we find on YouTube, on Google, and that's fine. Nothing wrong with that, right? However, when we look at the charts, they reveal all the informations. We can expect and anticipate price move. Okay, doesn't mean we're going to trade them necessarily if we don't want, but at least we're going to have an edge so we can anticipate some events. And if we're going to create a trading plan around, we will know what's where the money flows at that particular time. But as always, I like to recap from the previous webinar. So again, it's not a series of webinars. There are not series 1, 2, 3, 4, 5. No, but I try to keep all the content relevant all the time, so it helps your learning journey. Okay, we spoke about trend analysis. We said that here. We said that we do have the impulse move. This is an uptrending analysis. I'm not going to go through everything because it's on a webinar on YouTube channel, so you can watch it. And we have every time the market makes an impulse move to the upside, then we have what we call retracement to the opposite direction. And then the market again regains some speed and moves to the upside and create higher prices on this bent line, and then again retrace back and then keep moving to its original direction, creating this series of higher highs and leaving behind these lower highs, or this higher low, sorry. Now, every time we see the line bent, we call them swings in the market, and we call the direction we call the predominant direction, let's say that, as an impulse, and we call the move against the predominant direction as a retracement. So the A's are the impulse, the B are the retracement, and this consists an uptrend. And on the contrary, we have the downtrend, where we find the impulse move, they are longer in duration and in price during the falling, and we have smaller retracements in the opposite direction. We continue with an impulse move to the downside, retracement, then another impulse move to the downside, and so on and so forth, until we see something like this in the market, which it's going to tell us that this downtrend came to an end, and now most likely uptrend it's going to develop. Okay, so a move aligned with the predominant direction, it calls impulse, and against it calls retracement. And last, we do have this ranging market where the price is just bouncing between support and resistance. The bottom is support and the top is resistance, and a trading idea for range market trading traders is we buy the support and we sell the resistance. We just keep an eye on the price action, what's happening around the areas, and we find some good and solid price action patterns, and we just execute. And I gave you an example here with the weekly and the daily chart on the Euro US dollar, where we have this move to the downside and then this retracement on the weekly chart. This retracement on the weekly chart, it consists by higher highs and higher lows on the daily chart. So a downtrend on the weekly, a retracement of a downtrend in the weekly chart is an uptrend in the daily chart most of the times. Okay, because each candle on the weekly chart, it needs 5 candles on the daily chart to consist this candle here. Another 5 trading days on the daily consists 1 weekly. And the same with the 4-hour chart. When you are trading 4-hour chart, you need 6 candles on the 4-hour chart to reveal you what happened on the daily chart. All right, so we said that the higher time frame provides direction, and the lower time frames provide execution, like this one here. The higher time frame provides the direction, which it's a downtrend, and we are keeping an eye on the levels of confluence to find some strong price action patterns, like the bearish engulfing in the downtrend or the bearish pin bar, and to execute. Okay, we have higher, it gives us higher reward to risk. That's what we said. And last, I gave you the checklist. You can take a screenshot, or I can also share it with you guys on the chart. If you want to share it on the chat below, please let me know, and I will do it towards the end of the session. Or otherwise, you can just take a screenshot and you can print it out, put it in front of your desk. For the trending market, we said that we want trending market. It's the market goes like this. Let's say an uptrend. We want to enter at the retracement. So in this phase here, and what we would like to see is the price coming and retest the horizontal support of the weekly chart. So let's say the daily comes to this support here, which is a weekly support. And then if we can use the fib retracement from here to there, we see the retracement. We want to be around 50 to 61.8%. So that's the second level of confluence. And then we want to come through on a moving average or a trend line support or a channel, whatever, just something to add to this confluence. And the last thing, we want a candlestick pattern like an engulfing or a pin bar on the daily or on the 4-hour chart. So it will give us a high probability trade. Now, you can use this checklist on any time frame you want. However, from my experiences, I tested it works much better on the higher time frames. By all means, you use it the way it's best for you. Just try it, give it a shot, and see how you perform with that one. And then on the ranging market, you can have your weekly or daily support resistance, and then you can see on the daily or on the weekly this type of double tops, let's say, or double bottom, and you find a candlestick pattern here like a pin bar or a bearish engulfing, and you are good to execute. And for those who like to trading with a MACD convergence divergence, is a moving average convergence divergence, you can just use it for an extra confirmation, and I don't suggest you to use it along as a standalone trading plan. Okay, so more extensive information, please refer to the last time's webinar, and you're gonna find there all the relevance. So about the oil and WTI, so the major driver of oil price is supply and demand. Now I'm going to just give you a few important things about that, and then we're going to go straight to the chart. And guys, I will encourage you, if you have any questions, just type them. I would like to see your engagement as well. Please type anything you want to ask, and we can go through. Okay, remember that this webinar, it's for you, it's for your own knowledge, so please feel free to ask whatever you want. All right. So oil's price is oil is driven based on the supply and demand. We know that, let's use the whiteboard as well. So we know that when the supply increases, can someone type on the chat below, what do we expect to happen in the price? And when the demand what do we expect to happen in the price? Can someone tell me? So when the supply is too much, it means there is a lot of production, so we expect the price to fall, right? Correct, Scott. Exactly, price down. So when we have lots of barrels, okay, and USA, they can produce up to 100,000 barrels on a single day of oil. Okay, that's a lot. So when we have a lot of supply, we expect the price to reduce. And on the contrary, when the demand is high, what can we expect to happen? The opposite, right? So we have a lot of barrels and we expect the price to reduce when there is too much demand. So we expect the price to go up, like what's happening right now in the world, but unfortunately not in a good way. Yeah. So another factor that affects oil prices is the cost of extracting and producing the oil. The more expensive becomes in terms of labor and machine maintenance to produce the oil and to extract it, who it's going to pay that increase in price? Down to the consumers, right? So whatever affects the oil and it makes it more difficult to be extracted or producing, then it goes to the consumers at the end of the day. Also, oil prices affected by speculators. Let's say people like us, the traders who bet on price move, and also on the hedgers who limit risk in the production or the consumption. Now, oil supply. Many of you heard so far about these OPEC meetings. They do them on a monthly basis, and there are 13 countries who, let's say, it's a cartel of oil producing nation, and we call OPEC meetings. So, and there are 13 countries. The countries you can see here. So it's Saudi Arabia, United Arab Emirates, Venezuela, Congo, Algeria, Angola, Nigeria, and all these countries you can read here on the slide. And then oil demand is driven by anything use the product, from gasoline for vehicles, planes, ships, to create electric and energy, and everything comes down to the consumption. Okay, and it's better, I prefer to keep going by showing some the chart of the WTI, and we can see all this how the price is driven by all these events, and what can we anticipate at the end of the day, right? So here is let's just change the color. Okay, this is better. Now, here is the weekly chart of the WTI crude oil. So we price the crude oil in US dollars. So here you can read the US dollar number. So we start, currently we are here. We are on the $86 per barrel. Okay, now, months ago, I remember it was beginning of March, we start seeing these events happening between Russia and Ukraine. And then over a week, we saw this expansion from $90 per barrel all the way in 1.5 weeks to it reaches $125 per barrel. Now, when the oil became so demanded because of the war between Russia and Ukraine, and so the price, it got skyrocket. And what immediately the companies who supply us oil for our car, or they supply oil for big factories to operate their machines, who they're going to produce goods for necessity goods like milks, like bread, like rice, like name it, whatever. Okay, instantly it became so expensive for them because those barrels they were producing per day wasn't enough to cover the needs of this unfortunate event, which is the war. Okay, so and just to clarify something, when I mention words like Russia, Ukraine, war, has nothing to do with political events here. Nobody's we don't discuss about the subjects, and I don't want anyone to think in those terms. We are viewing the charts, we are analyzing the charts, and we are analyzing the events that they drive right now this this price. So because it starts from there, then we can refer to these events, unfortunate events. Okay, but for the purpose of this webinar, I have to refer to these events. So we see that the price came from the 91 to 125, and as we said, that everybody else in the chain got affected. And what was the consequence? We start, even though immediately the week later the price dropped down below $100 per barrel, we still experience more and more and more and more and more increase in the consumer prices. Do you agree with that? I'm sure in regardless in which country you live, you saw that you were paying more for bread, for milk, for goods, for services. Everything got disadvantage to increase. Everyone got disadvantage to increase the prices. Okay, regardless, it was a big sharp move to the upside, and then it snapped back down to the downside. And for many weeks, we saw we were the oil price was trading around $100 per barrel, but many organizations, they took advantage of that, and they will keep increasing the prices. Isn't that crazy? Now, let's go one step backwards to see if we could understand something from this chart. What do we see here? This is the weekly chart again. We see the price from here moving up, and from 34 came to this resistance here at 66. Based on the chart patterns we learned on previous webinars, we saw a retracement back, but do you see these candles here? The red candles, they didn't manage to, the sellers didn't manage to create a sell-off like they've done it here. You see a big, strong bearish engulfing, then a small one, big engulfing, and then we have here small retracement and then sell off, sell off, sell off. So this candle here, they reveal the information that the sellers are not aggressive. Now, how can we translate it in the from the consumer's mindset and words? We can say that here there is a lot of demand because we don't see too much of sale, right? So a lot of demand maybe from airlines, maybe from new cars registration, maybe increasing in population, too many factors, right? Name them, endless. So a lot of demand makes the selling impossible to the downside. And we see that in a few months later, 3-4 months, we have the price coming to $75 per barrel. We start then trying to retrace back to this resistance, to this area here. And at this point here, again, increased demand. We see this bullish engulfing candle, and then we see another impulse move to the upside. So in 2021, July, we were trading at the highest peak at the $75 per barrel. Then in October, end of October 2021, we see that we reached the $85 per barrel. So within 3-4 months, we see this peak here. When the price came to retest this new support area, which I'm pointing right now, and we saw that the sellers didn't manage to break through and penetrate this level here. What could we anticipate, guys? Couldn't we anticipate that the price, it's going to create a trend in motion? It's continuous, its direction. Here we have this up, then we have this down, then we have this up, we have this down, we have this up, we have this down. Here it's an uptrend. A trend in motion continues is move unless an obstacle comes and stop that move and reverse it. So we didn't see continuation here by sellers. We didn't see that. We saw the buyers keeping buying this to and raising the prices higher. So here we could anticipate buying pressure and we could anticipate new high in the price. So the price move to the direction it's supposed to move based on this technical chart. However, the unfortunate events in the world create volatility in the price, and they make the move to explode to higher prices faster than the expectation. Than this sequence here, we see the buyers with small bodies. Yeah, there is a lot of demand, but it doesn't come with an unusual volatility. If you can see the volume here, yes, we see rising volume, but here we see lots of volume, lots of trading activity, lots of demand here. All right. And because these are not sustainable moves in any market, instantly we saw the market trying to digest this move here with this sideways. It tried to make up, let me clean it a little bit. It tried to make another move to the upside, but here the sellers, they said, okay, demand, it's over, and we push the price lower. But all this what happened here could be anticipated, not in this volatile environment, but that could anticipate it because of this uptrend, higher highs, higher lows. I do not see any sellers staying control. We don't see any too much of barrels available and not be needed in the world. So they produce, let's say, this amount of X amount of barrels per day. They consume X amount or X minus just a little bit amount of barrels per day. So there is demand. There is demand. They don't have too much in storage, like as an exceeded quantity. So what does this tell us? That, yeah, the prices, there is a demand, they're going to climb. And again, the way it expanded here, it's just because of this volatility based on these events. And then the price, it's trying to make its way to a level, a price level that is acceptable. That's what these levels exist for. Now, we saw that gradually the price, it's just moving to the downside, but what's happening on the consumers environment? Can someone tells me? In many, at least in Europe where I live now, I saw the fuel in some countries go up to €2.15 per liter. Okay. By this time here, it was 140, somewhere around 140, 130 to 140 at this area, where the price of a barrel, it was around $70 to $75. Now we are currently at the $86. Last week we traded as low as $80. And guess what? Instead of the price of the gasoline to go back to this price where it was traded below before, now it's around 180 to 185, let's say, at least from what I see in the place I currently live. So we have this major gap of increase, but that was the advantage of this move here. And they are still talking about this move here to take advantage and make people believe, make consumers believe that it's too expensive. No, it's not too expensive, because we've been traded here in 2021, September, October 2021, we were here and the price was about 140. Now we went back to this level here and the price, it's 180. Do you guys see this pattern here, that by observe and understand just basic things about how the markets move, how the markets behave, we have a whole plethora of information in front of us to work with and to understand. Now, if the price, it's going to keep, we expect as from a technical perspective, as technical traders, we do expect to see the price consolidating a little bit here. And based on this formation, I expect to see another retest here, and then hopefully to see the price coming back to 65. Now, there are two scenarios here. The first scenario, if we see this, the price coming back to this $80 mark level, and we see the price of the fuel stays around 1.8 euros per liter, or to go anywhere between 1.70 to 1.75, okay, it is still by far very expensive compared to where it was before, because we comparing two equal situations. 2 years ago, 1.5 years ago, the price was this and the fuel price was that. Now the price is the same and the fuel price increased. So why is this? Okay, so you can learn to anticipate few events by understanding this chart. And sometimes if you go on the Google, there are many useful information as well, but sometimes they complicate so much the information, which for the reader, especially if you are new in the market, it's sometimes it's impossible to understand what can you anticipate. You can only think that it's going to get worse and worse and worse. It's going to get more expensive and more expensive and more expensive because of what they put outside. But if you just go a step backwards and just observe exactly what's happening in front of you with the real actual prices printing in front of you and with the trading volume, then we can definitely get information as close to the reality. Okay, so for this particular, and if you guys observe the bodies of the candles, look at these bodies here, very long compared to the buyer's bodies, short. So it looks like we have exceeded supply here instead of more demand. So exceeded supply can cause the prices definitely to fall to the downside. But everyone, it's going back to this event here in February, March, with the unfortunate event between Russia and Ukraine. So regardless the price of the oil, it's getting cheaper. The fuel, it's still more expensive than what it was before when the price of the crude oil was here. The food is more expensive. The goods you buy, let's say clothing, shoes, whatever, clothing, the clothing industry also add on the prices, and everything, this cycle ring affects at the end the consumer. And who pays the higher dollar? It's yourself, myself, everyone who goes out and buy goods. So that's how this associate with the events. Guys, I would like at this point to hear to read some of your maybe opinions, or if you understand this, if you want me to explain something more. By the way, for some of you, maybe you first using the Zoom, you can, and maybe you don't know how to bring up your the chat panel. There is a button with, it says chart, and you can just click it and you can type and send it over so I can read. Please just let me know if you want to ask something, if what we said makes sense to you, if you understand now how the chart can reveal some information about what can happen in the near future, and how can you associate this price. All right, I don't see many questions coming in. So guys, that's all from me today. Really, I can leave it for a couple of minutes to just type maybe some questions you have here. Um, we have some time. Please use the chat below and just type. Georgie asked, what are the levels of prices in September that you expect for crude oil? Okay, that's a good question. First, the level, let's change this one. The first level was this one here. Okay, this is the last swing in the market. If we go to the line chart, you see the bend here. That's the last swing in the market. So this level here, it's the $85. So I was expecting to see this reaction on the $85, which happened. From this point, I'm expecting to see the price coming and retest the $96, $97. Now, if the US dollar, it's going to perform really strong, because today with the CPI, it shocked really the market in the US opening. So if the crude oil against the US dollar, it's not going to perform, so we can see some sell off. Either we can have a double bottom here at the $80, so we can have this room to sell. If we go down to the daily, to the 4-hour chart, maybe that was a nice bearish engulfing double top here, so could be utilized for some sales. And if we break and close below the $80, I will, with confident, I will mark this 66 level here. This one here, 66, exactly 07. Because that was the last point where the price touches before it explodes to the upside and create this impulse move. So for me, as a technical trader, this will be the level if we're going to break below. And hopefully we want to see the price come here so we can see some cheaper prices in the fuel, and in the goods and services. Okay, I think that we cover everything for today. So guys, thank you so much for your participation. I really encourage you to subscribe and join me on the live trading session where we analyze all the markets. Like we go through the pound, the euro, the US dollar, Swiss, Aussie, everything. If we have some trading to take, like we had recently, that was the Aussie Canadian dollar. We had few good trades here. Then with the pound, currently we are in a trade from here, from this level here. So I really encourage you to participate. We analyze Bitcoin. So if you have time, it's going to help you with your trading journey. Okay, because we do it as an informative trading analysis, and also we cover what we say on the webinars just for 30 minutes in the morning. All right, guys, I will wrap up for now. Thank you so much for your participation. I hope that you gain a lot of value out of this webinar. I wish you all the best with your trading, and looking forward to see you on the next webinar, and also on the daily market analysis. If you want, I can give you right now the link so you can register to the webinars. Let me just go very quickly to give you the link. It's this one here. You can use it to register. All right, and at the end, please make sure you're gonna redirect it to a page when I will close the webinar, to give us some comments, some feedbacks. Maybe what would you like to see more in the future? If you have any questions regarding this, I will read everything and we're going to answer them. Some content you maybe want to see later on. That's all, guys. One more time, thank you so much, and have a good rest. Thank you. Bye-bye.